Hey everybody, welcome to another edition of Zach's Live Trader. Here with you always, I am Dave Bartosiak. Little change of scenery, as I found out they like to do construction in this place randomly throughout the course of the day without telling anybody. So the good news is I've been forced out onto the balcony to bring this to you, and you get a nice little shot of a little bit of sunshine there. So if you're watching this in colder climates, I don't mean to rub it in, but there's sunnier places than where you're at. So here we're going to get elbow deep into Netflix because everybody's been talking about it. They've been a very hot commodity over the course of the last several quarters, and I've made some money on it in the past. Even today, we saw an analyst come out and upgrade Netflix. That's very rare to see that happen a day before an earnings report. That's part of the reason why our Zach's rank is structured the way that it is. And it gives a lot of impact whenever we see an upgrade happen so quick, so soon before an earnings report, because you really have to have some conviction as an analyst to come out there and say, yes, this thing's going to do much better than I thought when it's so close to earnings. So that's some exciting stuff, but we got to see whether or not that's going to hold any water. If that is in fact should that analyst have done that? Should we be bullish on Netflix given where Netflix stock already is? So if you have any questions, comments, or concerns here about Zach's Live Trader, if you want to see how any of these trades I talk about today end up working out, you're going to have to sign up for our Zach's Live Trader premium service. So shoot me a quick email, livetrader@zax.com. I'll tell you all about how to get hooked up with us for less than $10 a month on Zach's Live Trader Premium. So again, livetrader@zax.com. Shoot me those emails. This week we've got a full slate. We're doing Netflix today. We've got IBM tomorrow, Halliburton on Thursday just for the premium folks, and then Friday we're going to be talking about Alibaba. So we got a bunch of earnings videos coming this week, so you don't want to miss them. All right, let's dig into Netflix. Let's look at our Zax.com page here and check out what we have them as. So we've got them as a Zach's rank number 3 hold right now. They are going to report after the market closes on the 18th. Now, I just want to show you a quick chart here. Look at since last quarter, the stock shot up on earnings, pushed up to almost $130 a share, crept back to the sort of 110 level, and has been rallying since. So it's at 52-week highs here. Wanted to point that out first before going to our price consensus and EPS surprise chart here on Zax.com. I just wanted you to keep that sort of recent rally in mind. And as always, this black line is going to correspond to price over on that right y-axis. These green lines are earnings beats, little green arrows rather. You don't see any red lines because they haven't had any disappointments. So they've been very good establishing a solid track record. One thing that hasn't been good or solid, take a look at these EPS estimates over time. The multicolored lines represent the evolution of these estimates. And you'll see, especially in 2014, had high hopes for Netflix, and those numbers came crashing down. So then the 2015 number crashed down. 2016 number pretty much flat. But now, again, Netflix is pushing this out that 2017 is when things are really going to get nice. And that represents a huge growth number from this year to next year. But, that kind of tells the story of why the stock was chopping to the downside here from mid-2015 to mid-2016, because these estimates were just kind of sideways. It wasn't until 2017 really got into focus, and you started to see even the current year consensus estimates start to creep up, that you did have Netflix push higher. So the stock's experienced a little bit of a resurrection, so to speak, over the course of the last several quarters, as all of a sudden not just retail interest but institutional interest has really returned to Netflix. So that's kind of the grand scheme what we're seeing on the earnings estimate front. Now, what you got to worry about, though, is that these 2017 numbers end up crashing down just like those 2015 numbers did a few years ago. So you have to ask yourself if that's going to be the case here, or if it's not. Do you believe the numbers in Netflix? Do you believe the content? They spent $500 million on content last year. That's a ton of money. And essentially, it's all about, are these guys going to be able to keep on bringing the hits, right? So you had Narcos, was just a recent big hit. And what Netflix thinks is that they're going to keep going in that direction, that sort of Latino focused, or at least have a little bit of subject matter there that's kind of Latino focused that they want to bring to the front. So you're going to see more sort of shows like that. And they're expanding in Brazil, so that's something to consider. We've talked about them going out to China and things like that, but you got to worry about all of the prohibition you're going to see in China, right? It's all about censorship in China. I don't believe that they're just going to open up Netflix to everything that's on there. The Chinese government really scrutinizes that sort of thing, so that's something you're going to have to look at. But you don't really have that issue when it comes to Brazil and some of the other countries. But what you do have in these emerging market countries is the actual availability of the internet. How are you going to get this sort of broadband data passed across in areas where the internet really isn't doing all that well? Kind of like where I am right now, but that's sort of an inside thing. All right, so let's go ahead and take a look at the detailed estimates page here now on Zacks.com. Dig in a little bit more of what I was talking about. So they are Zacks ranked number 3 hold right now. Value, growth, and momentum scores of F. Something you don't see a lot of, and something I didn't expect here with Netflix. And they are, again, a Zacks ranked number 3 hold. They're going to report after the market closes tomorrow, so keep an eye on that. Look at these growth estimates, though. This is the actual numbers. You're talking 89% growth, 195% growth. So huge growth numbers. But again, that's why you're paying the premium that you are for Netflix. If you look at the overall industry, they are in the bottom 38% of our Zacks industry rank and in the bottom 31% of our Zacks sector rank. So those are a couple negatives to have there. Now look at these consensus estimates when you're looking at the revenue. So current quarter, you're talking 2.47 billion. Next quarter's number is looking like 2.61 for a current year number of 8.82 billion. Next year's number is looking like $11 billion. So some big time moves to the upside on the revenue front. Now, if you're looking at earnings estimates, this is really what we're all about. There's been a little bit of confusion here. If you look at the current year number, you've got one analyst dropping their estimate over the course of the last week, while one has increased over the last week. Next quarter's numbers, you got basically 2 to the downside. Overall, the current year numbers, 3 to the downside and 3 to the upside over the last 60 days. But the more recently, you've just had 1 in the last 7 days, 2 in the last 7 days for the current year. And then next year numbers, we're still fighting about next year's numbers with 7 analysts dropping their numbers for the last 60 days on shares of Netflix and only 2 increasing. Okay, and if you look at our impact to the overall magnitude, pretty much null, right? Next quarter's number has dropped by a penny. Current year number has gone up by 2 cents. Next year's number's gone from 102 to 98. So a whole lot, not a whole lot of movement there in those estimates, even though the stock has certainly rocketed higher. So how are we going to end up playing this one? This is an interesting sort of play here. So let's go ahead and take a look at barchart.com. As always, I like to use these guys as a nice little free data provider for options quotes. And what I'm going to do here is look at the nearest expiration, which is in fact the 20th. And we're going to flip this to the side-by-side view so that I could see calls on the left side and puts on the right. Go ahead and highlight here for you this sort of at the money call and put that we're going to look at to do our calculation. Okay, so let's open up our handy dandy calculator and see what this looks like. So 605 by 620 is what the call is trading at, so let's call that 612. And then 655 by 670, so we'll call that 662. So $12.74 move is what they're pricing in here on Netflix on a $133 stock. That's a 9.5% move. So again, you're talking 12. Let's just call it $13 to keep this calculation easier for us. That means to the upside, we're expecting 146 to be the end of the upside, and the downside 120. So you can see that's a pretty big range from 120 to 146. Okay, so something to keep in mind here when you're looking at shares of Netflix. Now, this front expiration is really where the risky business is going to take place. If you're going to put a trade in here on the January 20th expiration, you better hope that this stock moves in the direction of where it's supposed to go right away. So if it doesn't end up going in that direction, it's going to take a little bit of time for the market to go ahead and catch up with it. Okay, I'm always hesitant to trade these just front month expiration, front week expiration, unless I'm on the short side. So if I'm looking to short premium in this, that would be something I would consider. Okay, but if you want to be aggressive and go super long, and you want to catch some of that post earnings drift, then I would definitely go out, in this case, out to the February expiration, that February 17th expiration, to catch some of that post earnings drift. Okay, so here's what I think I want to do with Netflix. I am going to go out to the February 17th expiration because I want to get a little bit more time. And this way, since it's not coming up right away, you're going to actually be able to see a lot more strikes on this chain. Let's drop this from the side-by-side view to the stack view to give us a clearer picture of both sides of the equation here. Bar chart also does a very nice job of giving us sort of the midpoint of the bid and the ask, so it gives us an idea of where these trades might get filled. So it's a really nice thing. Okay, so here's the surprising part. So essentially we said about $13 is what we're expecting out of this. So 146, let's call it 145. You see, you can go all the way out to the 145 expiration, and this thing is still trading for $3.40. So there's still juice all the way out there. But that's what you expect on a stock that moves so much on earnings. And the further out you go, they actually still have money. Even the 155s are going for 151. So not a cheap stock to trade or a cheap option to trade by any stretch of the imagination. Now, last time Netflix had one heck of a gain on earnings, right? They had a huge pop. So if I'm bullish on this, I think that given the recent options activity, I don't think it's a rope-a-dope. I think maybe this is something that can continue to move higher over the course of the next few months. So what I would do here is I would definitely go long something in this 130 range. So looking at this 130 call. But rather than going all the way out to the 145, I can play it a little bit safer by just looking at the 140s. And it's going to be a little less money that I have at risk, with a better chance of this actually happening for me. So in this case, I would go long the 130. It would cost me $953 or $953. And then I would sell the 140 call for $498. So I'd be looking to pay about $455 for this call spread. Now, the good news about this is the difference in the strike price is $10. The amount that we're going to put out is $4.55. So you could make $545 on this trade. So if you take $545 and divide that by the $455 that you got to put up, you're talking about a potential 119, 120% rate of return on this. And all you have to see is Netflix to go up $7 by to be up $7 at expiration, which is February 17th. So if you are bullish on this, you think it's got a little bit of legs here that it can keep on rallying, that's definitely the way to go. Looking at this, looking at that options trade. Okay. All right. Now on the flip side, let's go ahead and clear out this this drawing that we have on here, and let's look at the puts, because this is certainly a situation where maybe they just overcook the expectations here. Now, if you notice, these puts are actually a little bit cheaper. Now, again, we were saying 120, but rather than 120, I think you should just look at this 125 number here. Play it a little bit safer. And again, we are out to February on this. So what does this bearish trade look like? This is if you are a bear. You would go long the 135 put. It would cost you $885 to put that put on. But you don't want to have $885 at risk. So what you can do is you can sell the 125 put. You're going to put $4.48 back in your pocket. Get this calculator working here. So you subtract that $4.48 that you're going to sell the 125 put for. So your total dollar amount at risk is going to be $4.37. Now again, the amount of money you can make here, difference in the strike price is $10 minus what you outlay here for the spread, which is $4.37. So it's $10 minus $4.37, which gives you $5.63. So you got the potential to make $5 63 on 437. So in this case, we have the potential for 128% rate of return. And all you really need to see is shares of Netflix close at or below $125 at expiration February 17th, 2017. So both of these trades are looking to take advantage of that post-earnings drift. So what that is when analysts fully digest and investors digest the information given on the earnings report, the stock tends to trend in one direction or the other. So what I'm hoping to do here by going out to February is I'm eliminating some of the risk associated with that front month option. So that's good. I'm giving myself a little bit more time, which is also good. And I still have a very nice payoff potential for waiting. Okay. So in the case of Netflix in particular, which one of these trades do I believe is going to work out, being bullish or being bearish into earnings? I'm looking to be bullish here again on Netflix. I am a little bit concerned that the stock has rallied so much here, and seeing an analyst be so bullish is pretty amazing to me. But I think that there are huge opportunities opening up around the world for Netflix, and this could get back to one of those rock and roll stocks that's breaking out. Could be one of the hottest stocks of 2017 if this thing just keeps on going. Plus, you've got the cord cutting that continues to take place in the market. Netflix bringing out the content, becoming a bigger and bigger player. I think there's going to be big things for Netflix in 2017. Again, you don't have to agree with me, okay? You can put on whatever trade you want. You can put on this bearish trade, you can put on this bullish trade, or you can put on whatever one you want. I'm just hoping that you can use this analysis as part of your overall analysis to put together any option strategy that you might have on shares of Netflix. So I'd love to hear what you ended up put together. You can put that in the comments section here below the video. And again, for any comments, questions, or concerns, and I also want to hear what videos you guys want next week. And next week's earnings, again, this week we already have a full slate with IBM, Alibaba, and Halliburton, but I'm looking for next week again to see what you guys all want. So send that to livetrader@zacks.com. Also, if you want to hear about our Zacks Live Trader Premium, that gets you not only one free premium video a week, which in this case is Halliburton, but also the review video where I cover all of the trades that I have talked about so that you can see which one of these worked out and which one of them didn't. So thanks so much for bearing with me here in the sunshine. It's getting a little hot. I will see you all tomorrow for the IBM video at 1 p.m. Central. Thank you and have a great day.